All right, welcome to video 3 of 3. Another 55, 56 stickers here, I don't remember. PG, erasing a huge drop from December and going long into that huge drop candle is not smart. It could get to 151.5, but I think this is an exit point and it's a buy to dip opportunity into the 148s. Pinterest, it's at risk and has an opportunity. It's at risk of coming down and testing the 35.40. And if you lose for 35.40, you'll end up in the low 30s versus the opportunity of taking out the prior high and then ending up at 39. So from a trader's perspective, those are the comments. From an investor's perspective, is this a high? No. So this is a weekly. Oh my God. Okay. All right. So it doesn't have, although it has a lot of failures here, they're pretty old. But if you look way past this mountain, this was a prior interest level that had failed big time. 2019. This was a real breakout in fall of 2020, which was the breakout for all of these stocks. The crypto, not crypto, the ARC-like companies. So you do have sellers, but they're too old. I wouldn't start longs here. PLAB. Yeah, I don't know what to make of this. It looks heavy. It looks like it has sellers above and buyers below. I think it's easier to get to 26.50 than 31.50. Palantir. You could have sold puts on this dip, and you still can if you want to own shares. It will follow the markets. There is a chance it's doing these scallops. So every rally is going to have something like this after it. I wouldn't be surprised if that happens. It's not a disaster. It's just a lot of buyers down below. If the markets crash, this might be in danger. But if I took a partial position in it, that's all I would do. And the red line needs to hold, and it has the heaviest volume. So even if it fails, you have one backup at 14.50. Still a decent place. PM. Hello. Let's see here. Stuck in the middle, you have heavy sellers above, which are catalyst if you take them out. Heavy buyers below, which provide support through 92 and 91. Philip Morris, good P&L. Bad business, but good P&L. And we have, who is this? Quanta Services. Heavy sellers into 212 and no buyers until you hit 190. You determine which is easier to get to first. PayPal, I would not be long here. They're changing a bunch of stuff. I don't know if it's for the better. 62 is a problem and a catalyst, and if you overcome it, it will put you into 64, which is exactly the same thing, only on a bigger scale. Heavier resistance at 64, which makes it a better catalyst, versus a solid bounce off of 57. So good buyers. Let's see if they can do it. I'm leery, to be honest. I think they might it's a buy to dip scenario for me. Look, rally, sold, new low. Rally, sold, new low. Rally. Are they going to sell it to a new low? So from here, you got to here. From here, but we didn't do that right. From here, you rallied and you made a new low. And then you did it again. You made a new low. And are you doing it again? It doesn't quite fit exactly. You'll have to make it shorter like this. But you understand the risk of disappointment? They're already here right now, inside this, like right there. They already rallied. Just be careful. Qualcomm, I would not be long here. If the markets hiccup, this one will end up at 125. I don't know their business real well, but the P&L looks healthy enough, so I don't have a bone to pick with it. But be careful. That is a big seller up top on a shorter time frame, and on a longer time frame, you can see it. Huge seller at 142 and sellers scattered through 146. A bunch of buyers, but they don't look as strong as the sellers, so we'll see. The gooseneck. RBLX, I would sell rallies into 42.5 because it's probably going to 39. So I think that if you get upside and you don't get help from the markets, you're probably going to do this and retest the support from this week, and it's easy to get to here or here. Earnings soon? No. Rengold, Royal Gold. What is this? Gold miner. Okay, good breakout opportunity. So if the bulls can take out 126, they can get up to 132, and you have higher lows. If somebody went long on a dip, I get it. If not, buy the dip into 120 to curl back up. So the opportunity is either to break out from here. You think it's a buy the dip opportunity to see if you can support below. B. Riley Financial. Yeah, not for me. You have support and you have resistance. You might be stuck until you take out 26. You take out 26, you can get to 31 or 32, and you have solid support below. RIOT, this is like Mara. This would be one of the worst ones for me. I wouldn't touch it. This stock, regardless of my opinion, is falling into a prior base, so you have support scattered into $10. And this could be the target of the head and shoulders, $3 or $4. 3.8, yeah, 10 is the target of that head and shoulders. So visually you can see that there was a demarcation zone here somewhere, and if you think that that's the downside scenario, it puts you in the $10 zone, which was a prior base. So support from here on down, support. And the rally is going to be met with sellers. Whoops. This here is going to have sellers, resistance. Hopefully you followed the logic. Sell the rally mode, just in case. Same here. Sell the rally mode. I'm starting to see a lot more of the RIVNs in my area and a lot more SUVs than trucks, which people are more likely to buy. My problem is with this Aqua Lines. You cannot lose $7 billion a year and not change it. The problem with this is, for me, is fundamental. Let me show you. So you have sales and you have cost of goods sold. It's more than double on the sales, and then you have operating expenses almost as bigger than sales too. How is this game going to end? This is like a rich person having a store that loses twice as much as it makes in sales every year and leaving the store open just because they can afford it. At some point, the investors will say no mas, and then something is going to have to change. It's weird. So the cost of goods sold, if you sell burgers, the cost to make the burgers, the buns, the meat, the cheese, the lettuce, the tomato, that's what is in here. No labor, no rent, no linens, no knives, and no plates, cost nothing. So the cost to make the burger is twice, if not more, than the price of the burger. So it costs you $5 to make the burger, you're charging $2 for it. And then you have to pay rent and all of this, and then you're losing another $3 or $4 on top of that. How do you stay in business? So something has to change. And the car is good, the tech is good, it's cool and everything, and they sell each one they sell. But something's got to change. So from an investor's perspective, respect that. Have the investment and forget about it. From a trader's perspective, it's falling into support. I think the rally into 22 might be met with pretty big sellers, and it might revert lower. So it's a trading stock for me, and you do have support, and you might get this, and I think you will have a lower high. So that's a path. Can you make money off of it? That's the path. ROKU. Ooh, wowza. ROKU better hold the lows from last week. Otherwise, you're going to 76, maybe even lower. They are selling rallies, so respect that. And expect lower lows and lower highs until they stop it. How will they stop it? If you see it come out to 95. They're out of that riptide. So they need to swim sideways to get out of this riptide and then pop. Otherwise, this is your target down here somewhere in an eventual, you know, like this. Respect it. Sunrun. This looks like a technical place where it finds buyers. I don't think so. I think having lost 15.5, so I'll say it this way. If Sunrun doesn't get back to 16 and change, it's probably going to 13 and change. I think the stock lost support and the target is somewhere in the 13s. I do have Sunrun in my house, by the way. Awful customer service. Terrible. But love the solar. Just the custom, you know, if you need to talk to them, forget about it. In fact, they owe me money. I need to call them. So this played out perfectly. Now what? Nothing. You have buyers, solid buyers. So it's on my, I think it is. Yeah, it's on my watch list. I thought it would find support here, but I was wary about the markets, and the markets had a couple of bad weeks, and Starbucks took it on the chin from that. And support is scattered through 90, and better support through 89. So, by the way, thank you for coming here on a holiday Sunday. I appreciate it all. So this is, I will move this here. Comments from way back then. Support, but better hold. It should hold, and this is support also, you know, support zone, I guess. Credit put spread could work. 11 days until earnings, I wouldn't do anything with it. SE. It's like I'm a moth attracted to light with this thing. Every time I trade it, I say, never again. If it collapses to 29 and 30, I will trade it again. I'm going to put an alert here. Right now, it's in desperate need of a hold. If it loses 35, I think it's going to 30. So be careful. They're selling the rallies. I think there is a big seller at 39. Oh, you're welcome, Jess. So rallies, I think we've been met with a lot of resistance here. So be careful of this. How long will this floorboard last? If it doesn't, it comes down to here. Be careful. I will trade the dip, but not here. Shopify, I would not go long here. You remember Shopify? Nobody wanted it when it was going to zero down here. The Hindenburg report, whatever that was. We went long a few times on it. We won with every long. One of them gave us a lot of heartache, and some people got assigned, but if they did and they hung on to it, they made a bundle. So good stock, not up here. Buy the dip, short-term, low. Okay, so there's not a lot of transactions. That's what I was trying to say, but now it's support zone. Okay. So if they drop into it, it should be a support zone, better support zone down here. So talk to me when I would not invest in it until it goes into the 50s. I would sell a put. SJM, you see the neckline that just triggered, and this was the downside target of a head and shoulders. Well, now they're coming back into the underbelly. Last time I drew this head and shoulders, I don't remember when. They went through the hole, and now they're coming back into it. Not an opportunity to get long. This whole area should be resistance. If you're a trader, you could get $5 out of it if you're an active trader. Like if they pop above last week's high, you can get $2 or $3 out of it, trading-wise. Investment-wise, I think these two candles are huge resistance. Sellers. Skechers. You should see the warehouse they have around my area. If you're driving up east from where I am, wow, the building is massive. They're buying dips, and I think, too bad they have earnings. This is a nice tactical short. Look, so via credit call spread. You see these cycles that I have these boxes in? So what I was trying to say, it has a rhythm. They're buying dips, so from here to here to here to here. You see how it is? Rhythmic? So what if there's another one of those? So how can you do that? You sell a call spread and you buy a put spread. I don't think we have enough time, 18 days. That's pretty difficult. So we'll see. But if I'm long, I would use that. Like, it's easier to drop to 57. Although the bulls are completely in charge, so you can't buy puts. Schlumberger, they bounced off of a solid support. Good. Now they have problems above 51. And the question is, can they hold that support? If not, they'll be at 46. So they're either at 51 or 46, right in the middle. If you guess up, you expect the markets to rally. I think 50.5 is a problem. Earnings in 5 days. So it's a coin flip on the earnings. Okay, what is this here? This did not happen. Oh, SOFI. When it fell into 8.4, I had an influx of requests. Would you go long? Would you go long? No, no, no. I will go long under 7 or closer to 7. I don't know what kind of a company it is in this environment, to be honest. I don't know how, if there's a huge default on debt, unsecured debt. They are, I believe, mostly unsecured debt. This is a potential downside of this Head and Shoulders they just lost. Let's give it less oomph. This is doable. If you want a conservative, downside of that would be this. Oh, look at that. Perfect. The sellers are into 8.5, 8.6. The buyers are scattered through 6.8. Why? Because the rally was pretty fast. So if I'm long, I wouldn't add. If I'm looking to get long, I wouldn't take more than 30% stake. I would prefer to sell puts, but there's not enough premium. So nibble on shares or nibble on leaps and expect that you will have an entry point lower. SBH. Wow. Don't know what that is. Yeah, the chart says whatever this was, it's not going to probably repeat itself. Sellers into 18.2, buyers below. I would buy dips if I was trading it. SPY, I will have a whole video about it tomorrow night. Not an obvious entry point. That's the easy stake. Okay? And I will have a whole video on that. SSL. Yeah, that's the sellers are selling rallies and the buyers are trying to hold 9. If you lose 9, you go to 8.4. Meanwhile, heavy sellers into 9.8. Black & Decker, not very good tools. Don't get insulted. My son uses tools for profession, and that would not be the tool he would buy. Sellers are at 102, plus or minus. Buyers are scattered. So I think it just follows the markets. So if we have a bad market, it'll end up at 88. If we have a breakout to all-time highs, maybe they get back to 104. So from an investment perspective, there's nothing new to do. AT&T, let's see what all these lines were. This is never an entry for me as far as an investment. If I was torn between AT&T and Verizon, I will always fall on Verizon. 15.8, the green box below current price should be support. That was the area they broke out from. Oh, I remember what that box is. The box is a golden zone of the not harmonics. It's a Fibonacci area of interest. And they failed into it, which is fine. So it will provide some support. So I would say AT&T has support below and has a lot of sellers above. I wouldn't hold calls. I could hold shares for the income, but it's not my pick. It's a better entry point on lower, on like freak out moments. And we had one last year in it, and we bounced via Verizon, but we mentioned AT&T as an alternative. And if you did that, you're making money. Who is this? Oh, Target. Okay, so definitely not along here because the whole zone above is resistance. That R still is there. So that R is legit. And if from an investment perspective, I'm not rushing into it. From a trading opportunity perspective, 145 could get you 150 versus the buyers at 138 will be tested. 139, 138, buyers there and there. And if you lose 138, you're probably going to 132. So as a trader, to buy the dip into 132 would be better. Does it have earnings? Oh, they already did the earnings. Who is this? TJX. It looks like it wants to break out. I don't think it's out of the woods yet. I think the bulls need to be above 96 to make it avoid the downside to 92. Otherwise, I think it has another trip to 92. I hope you caught on to this one. 96 or higher, then the 92 scenario gets less and less likely. TLT. I still think that Powell cannot cut rates. And I think if he cannot cut rates, then the TLT is probably going to 93.50. That's the easy statement on that one. It's a trading statement and also combined with strategy statement. Why should he need to cut rates? Somebody needs to tell me why they need to cut rates unless we have a crisis. And if we have a crisis, then the TLT conversation is different. But the way things are now, I don't think he can cut rates. They declared victory on inflation way too soon. You know, 1 month oil drops and suddenly we don't have inflation. Okay. So TLT, I would bet down then up. TREX company. Wow, that's a pretty amazing chart. So sellers, and that candle is difficult to breach, but if you breach it, 85 will get you whatever you want. Versus buy the dip into 75. 85 versus 75. Tesla, don't touch this. If you were in the live room, you heard me say, I would not hold calls in Tesla. So here we go. Tesla lost footing, and this is going to be a descending channel, and to test these two down here in Wonderland. What's Wonderland? Under 200. 100 and something. Wonderland. So if the market's hiccup, Tesla could be at 184. That is in a series of descending channels. If I'm long shares, for an investment, I'm not adding. I don't think it's a place to add. If I'm looking to go long shares, I should be patient. If I cannot be patient, then I should use some sort of a credit spread. Credit put spread, sell puts on shares, and leave yourself some space. Why? There's a bunch of things that don't make sense with Tesla. So right now, and the EVs and all of that. Be careful. Rallies into 232 are opportunities to exit. So if I'm long and I get a relief rally and it's a trade and I'm able to get out with minimal damage, I would take that advantage and get out. It does have support. I give you that. But the chart tells me that it's going to be a sequence of events down lower on this time frame. Let me zoom in and see if I can change my mind. You can see how there's a lot of sellers at every point. So be careful chasing upside. The worst thing I can do is hold calls in Tesla. I will not hold. Do whatever you want. Hold shares so time is not an issue. Hold a call spread. So sell some put spreads or whatever. But naked calls are pretty dangerous. Too much conviction. This one is Taiwan Semi. I hear that there are elections in Taiwan over the weekend, so whatever the outcome of those elections, I'm pretty sure this one will react negatively or positively for it in response. And 106 may get you 112. As it is, this chart on a daily basis, which is a slow-moving statement, is it's easier to get to 94 and 93 than it is to 108 on this chart. I will change my mind if they make a higher high. So the trading, it says lower is easier. Headline may say otherwise. And earnings are in 4 days. Pew. So I wouldn't do anything with it. That's the bottom line. Too much guessing. Guessing on the elections, guessing on the earnings. Where's the investing part? Might as well go to Vegas. and put them all on red or black on the whatever that blackjack. No, roulette. TTD, buyers below, sellers above. I think a bunch of sellers at 75 and a bunch of buyers at 60. You lose 60, you go to 48. You take out 75, you may have a chance at 78, which is another set of sellers. So the long here with a stop, because if you lose that, long here. In fact, I will put an alert down there. Not an obvious entry point. You literally are testing the prior fail. So if you're buying a call here, you're saying we're going to break out. Maybe. Just make sure you put a tight stop. I would rather buy the dip to curl back up and break out. Texas Instruments, it looks like it's easier to come back to that purple line, to 156. And if it does, it makes a better entry point there. I think I went long this for us. I'm pretty sure I did. So I'm going to put an alert here. And an alert here. Because it's a good solid P&L. Look how boring this P&L is. If you take out 173, you're probably going to 185. Wait, when is the earnings? 9 days earnings. Ugh. Okay. ULTA, shortable with an immediate stop. If it goes above 495, 498, you're probably going to 535. Credit call spread, debit put spread would work. But like Lulu, this one is not very liquid when you go to trade it. So very frustrating to close winning positions, let alone losing positions. So be careful. This is probably still in play unless they break out. Okay. UNH fell on earnings, and I did not look at the report. I will look at the report this week. It did what we thought it would do. Curl. It took a higher high, but it curled back down and it lost the neckline. They closed above the neckline, but this is still in play, this arrow. So I do like it, but I would like it much lower, and I think it will go lower. We'll see. Upstart. That should be a teenager. It should be 19, 18, something like that. I wouldn't short it for that. I think I shorted it before. Anyway, yes, we did via puts, and then it popped. So the put position, I forgot to look at it. If somebody still have it, is you might get a whoosh back down to 28. If you do get that, any strength that gets you out of a losing put, I would take it. But from an investment perspective, I wouldn't touch this thing. They are thieving people. They are literally thieving people. Unsecured debt, front-loaded, amortized like a mortgage. So you pay for 2 years and you're not even 20% into your debt payment. It's like more than half of your payment goes towards debt. It's just bizarre setup. Weird. So I don't know how long they can maintain attracting clients. So technically, 38 or above, you get some relief. You might challenge 44, and that would be an exit point for me. Remember that stock was like $400 at the pandemic height. VERV, if you lose 12.5855, you probably go to 1150. No income, all spending. What? Okay. If you're investing in it, the chart is not going to help you. Do your homework on the company. Vermilion, in the seller's hand, this one. Rally sold, rally sold, rally sold, and each rally was sold and made a lower low. So the question, will it take out 13 or 10.6 first? And that's literally a question. So they are right here right now. So they went up and came down, and they rallied, and they couldn't make a higher high, made a lower low. Rallied, battled over this area, they couldn't, and made a lower low. So now they're rallying, and they're not even above the halfway mark, which they've done before. So what now? This X first or this X first? VSH. Solid support, confirmed a couple of times. Backup support. So you have support and a backup support and a bunch of sellers above. So from an investment perspective, do your homework. From a trading perspective, it's pretty difficult. You have a seller, immediate seller at 23, and an immediate buyer at 22. You lose 22, you're going down to 21.40, 21.30. You take out 23, you may get to 23.40. So it's splitting hairs here. Not my style of trading. Verizon is a stock I would own on dips, not up here. If it comes back down to 35 or whatever, or lower, I would consider it. When it dipped here and here, I said buy it, and it did. It did perform well, and it also pays a lot of dividends, and it's a good solid P&L. WBD, too young to prove in itself in the long term, but I think fundamentals, the P&L, if they're not lying about it, it's a little weird. What the hell? Okay, so if I'm an investor, am already owning it, I wouldn't add. If I'm looking to invest in it, going long into 10 or lower, it seems like a good thing to do. Only I wouldn't take more than half if I'm a slow poke investor. It's a good long-term shot against some support. Earnings in 39 days. So, okay, I see the long. I'll add it to my watch list. I've never traded it, so we'll see. Wells Fargo, they reported, right? Yes. So I wouldn't touch it. Banks are so overpriced from a stock perspective. It's not even funny. Not from a book price to book ratio or anything like that. So I think rallies into 49 will fail, and it probably drifts lower towards 44, maybe even 42, 43. So it's not for me up here. Still shortable. Walmart is doing its best. Potential sellers, not a place I would start longs. You can still curl back down to the test the bottom. There's never enough stuff to sell. I can't sell call spreads or calls or puts or anything like that. So I'm at the mercy of swing trading it fast, and I'm not. I mean, I can find if I'm trading fast, I better use faster tickers than this one. If I'm an investor, it's not for me up here. Wolf, look at that. It did what we said it would do. It didn't even, it popped a little bit and then came down to here, right there. And I say it would pop again, and it did. And right there from the neckline to our target. Hand drawn, couldn't be more perfect. Okay? Couldn't be more perfect. I tried trading this one twice. It was hideous. It was very frustrating. The quotes are wonky, the fills are bad. And so now, from a trading perspective, 48 is death. If you take it out, you get to 60. In my experience, the benefit of the doubt goes to the sellers with the stock at all times. Why? Look at it. Lower lows and lower highs for years. So treat it as, oh, maybe this time it'll be different. Say, no, it won't. The bears are going to lose, and then you'll be safer that way. And this could be at 32, 31. And look, from here to here, came back and made a lower low. This is possible. Be careful with it. Looks like a better short than a long up here. The sellers at 49.50 are pretty hideous. That's a tough seller right there. So I would be fading longs into 50 from a trading perspective. From an investment perspective, that's something else. You do have trading perspective. You have technical buyers at 47 and 46, and a bunch of them below 45. And you have two sellers above. If you take out those two sellers, 51, you get to 54. But I don't think it's that easy. XBI, I would not be long here. I know seasonality and all of that. I don't care about that. For me, price action. Point A to point B to point C. Point A to point B to point C. That's what I think is happening. So if I do this from here to here, we are here. Prove me wrong and take out 95.2. You get to 104, 105. Buy the dip, I get it. But chasing with calls, naked calls, I don't get it. If you do something fancy by selling calls and puts and all of that to finance a position long, I get it. That's fine, as long as I'm not out-of-pocket expenses. XLC, you know the story. It's shorting Meta. I am long a put. It was green for a day and a half, and then it went super red, so now I'm down 30% on that put. I'm still in it. I didn't add to it. I want more clarity this week. On weakness, I might get out for even money if I'm running out of time on my put. So to manage the risk, if I get relief on any red days, I would exit for even, as close to even as possible from the put. I don't double down because I don't know anything new, and I'm fighting the fight with Meta, and Meta has been on crack. And the second stock in it is on almost the same kind of crack as Meta. So combined, they're half of it. The top 9 stocks, the top 9 companies in that ticker are 80% of it. So a handful of mega caps can, you're basically shorting the best companies on the planet, and that was me. But it was a simple put purchase. Exxon, I am not a fan of oil companies up here. I'm a fan of the company. I'm not a fan of this price up here. You can be long against the recent support, but if you lose 97.50, I think Exxon can go into the low 90s. A lot of sellers above. Great company, great management, and all of that, but I think they don't have price controls, and that's what's risky. So the PE can change like in an instant. Their PE that can become super inflated through no fault of their own. This one is stuck in the middle. You have buyers below and sellers above. Solid support at 131, better support at 128. Unbelievable sellers through 143. So I wouldn't hold calls. I could hold shares. You could convince me to sell puts or put spreads, but not calls. Zoom, they just jumped into a resistance zone I had for them, and they might curl back down. I almost bought something from them this week, but then I didn't. I might still next week. Look left. I want you to pay attention to one tick. Can you find it while I draw it? What the hell is that? And look how pivotal that line is. So between here and 72.5, I think it's easy to get here. It's not easy to go through here. So keep that in mind. Buy the dip if you're interested in Zoom. Zscaler, I wouldn't touch it up here, and I'm the guy that goes long Zscaler on dips. This stock can rally so far, so fast. The biggest miss in my life was when I exited on like a 4x trade, when I won 4 times as much as I invested, and it went to like 40x. the visualization is I was long calls from here, and I got out here with a 4x, and then it did this. So those calls would have bought me 3 houses in California type of a deal. So it can run a lot further than you can withstand its short. So don't short it. It's just not an obvious entry here. All right. Woo! Boom. We're done. So there are a couple people that came in and gave me tickers. What are those tickers? I can do another 2. Okay, Bill. You submitted enough tickers, did you not? I think you're spreading the net too thin. That's my comment on this one. Comcast is inside of support, and there's a bunch of resistance above. It depends if you're investing or trading. Investing wise, that's fine. There's no action on it. Trading from point A to point B might be 70 cents or 80 cents. Weight Watchers. Losing. If I'm short, I'm making money. I'm looking for my exit. If I'm looking to go long, there's a big gap and it dates back. So I wouldn't go long yet. Maybe closer to 4.5. If I'm short, I'm winning. For a short. Okay, if I'm short, I'm winning. I would short a pop. But this is a headline stock, Gint. Be careful. You know, one person's words can move mountains in this stock, and that's just bunk. I would hate to lose to her words or whoever's words. So I'm just letting you know it's kind of manipulated. Oh, that's weird you asked about that stock. Yeah, what's your question? It's to the moon. Yeah, but she's still part owner, is she not? Yeah, there's nothing that the stock chart is going to tell you about this one. If they sneeze, this one will be in the 70s. It's priced to perfection, and I don't get it. This is the GE thing, or actually the Micron thing. So the stock is going to the moon, and where is that trend in here? Show me the reason here. Show me where is the improvement. It's shrinking, it's growing. The sales are not growing, not shrinking. The cash flow is okay. Statistically speaking, it's more expensive than it's ever been. So on a quarterly basis, actually, yeah, it's not just more expensive. It's twice more expensive than its highest year, which was 2021. And if you ignore 2021, it's like 5 times more expensive than. Anyway, it's just, I don't get it. Something has to give. In fact, I'm going to add it to my watch list. I might want to buy puts for giggles. This is just ridiculous. I mean, I can understand this in Microsoft, but wow. What the good Lord. This is the next AMC, folks, right there. This is the next AMC. Mini Microsoft? Yeah, no. Hi, Mary. TSLY. What is this? Short Tesla or long Tesla? Yeah, no, I wouldn't touch this. So if this is 1.5 times Tesla, so but it yields yield, so it pays interest. Okay, so I wouldn't touch this, honestly. I would trade Tesla with Tesla. I mean, Tesla is exciting enough. You don't need any accelerator to it. No. No. This can go to zero. No. If you want dividends, look into Verizon, AT&T on dips. This is just too volatile. I mean, if the dividend is 10% and the stock moves 20% a month, how is that a good dividend play? It's not a dividend play. Not in my book. Not in my book. Okay. Plus, this is a new equity. It could disappear. They could go to zero. I've had dividend players that went to zero before. I forgot the name of something with a V a long time ago. It just disappeared. All right. I'm going to stop.